Welcome, everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back, everyone. AMC closed at 762 on Friday, down 1.04% for the day, down 8.13% for the week, down 72.32% for the month, and down 89.96%, let's just call that 90% year over year. Whenever you're caught bag holding, all traders are confronted with the same choice. Do I sell, take the loss, and invest the proceeds into something else? Or do I hold and or average down and stay the course? Well, I will never tell my viewers to buy, sell, or hold any stock or cryptocurrency. I'm not a financial advisor, and this is not financial advice. But I've decided to stick with my AMC trade at least until the end of the year for tax purposes, and I will give you my reasons. Number one, AMC remains the largest theatrical exhibitor in the United States and in the world. And even with the threat of more dilution ahead, I'm certain it's worth more than 76 cents per share on a pre-split basis. Let me tell you why I can say that. Thanks to the decisions and policies of Adam Aron, Philip Lader of Morgan Stanley, and Derek Van Zant of Citi, AMC's market cap of $1.21 billion is actually less than our Q2 revenue of $1.35 billion, which was up 15.56% year over year. Number two, one upside to being the largest company in your sector is if you want to bring content to a live indoor audience, you literally have no choice but to go through AMC. It's nearly a legal monopoly, and at some point, someone larger than AMC is going to want to own and control that portal to the viewing public. Maybe it will be a studio, a business like Disney or Amazon, or maybe even a streaming giant. The original narrative of the shorts when this began was the theaters are dead and streaming is the future. I believe the recent performance of Barbie, Oppenheimer, and early indications on Taylor Swift proved that theory wrong. People do want to get out of their homes and see new movies, concerts, and other events in the theaters. I still believe while the overall size of the industry may contract going forward, AMC is uniquely positioned to still grow and has an advantage over any of its competitors, and that's the Apes. I would add that AMC provides a far better theater experience than its competitors and has a superior rewards program. Number three, the pandemic and the Apes forced AMC to modify its business model to include a merchandise website, a branded credit card, and a retail popcorn line featured in the world's largest retailer, Walmart. These modifications gives AMC a distinct advantage over its competition, but in my opinion will be practically worthless without the support of the Apes. This is the primary reason Adam Aron has never wanted a MOAS or short covering event of any kind and may never want one for that matter. He knows that a significant spike in the stock will result in some unknown percentage of apes to stop supporting the stock and the company, especially now that our price has dropped 90% year over year. To sum up this slide, while AMC remains the most manipulated stock of all time and could see more manipulation to the downside at any time, I think it's a screaming buy at these levels with distinct risk factors ahead, which we will identify and discuss. In my opinion, the largest threat to AMC remains COVID. There is an election coming up, and certain leaders in our government would like nothing better than to force us all to vote from home. This way, your cat, illegal aliens, and even your dead relatives get to vote. No ID required. It would be a total disaster if we had to cancel the Taylor Swift release, for example, due to a COVID scare and return all the money. But the good news is, so far, COVID has been pretty quiet. See this article from SIDRAP titled Main U.S. COVID Markers Continue Slow Rise. From the article, U.S. COVID-19 hospitalizations and deaths continued their slow rise over the past week, but two early indicators showed declines, the Center for Disease Control and Prevention said in its latest data update. Hospitalizations rose 7.7% compared to the week before, with admissions at the medium level in some parts of the southern half of the country and sporadic pockets of high-level counties in roughly the same areas. Deaths were up 2.7% from the past week, with Kentucky the only state in the high range. Of the early indicators, emergency department visits for COVID declined 19.3%, with Oregon as the only state at the moderate level. Tests positively dropped slightly by 1.6%, and it is at 12.5% nationally, with the highest levels in the southern tier of Midwestern states and part of the Northeast. Another obvious risk to AMC is if the writers and actors strike continues, but the headlines from this weekend are indicating we may catch a break here. From the New York Times, progress in Hollywood writers' strike negotiations, but no deal yet. A third straight day of bargaining between the studios and the union ended without an agreement. Talks will continue on Saturday. And then from AFP, hopes rise for an end to the Hollywood writers' strike as talks extend. And according to the LA Times, maybe we'll have some good news to trade on soon. From late Saturday night, WGA, Hollywood Studios close to a deal on ending writers' strike, sources say. Another risk factor I'm worried about is the psychological aspect of the AMC trade. I'm sorry to say that our enemies may have won this part of the battle, and I'll explain why. In the movie The Godfather, Michael Corleone wisely says, one thing I learned from Pop was to try to think as people around you think. Now, on that basis, anything's possible. You see, all our people are businessmen. Their loyalty is based on that. Now, I've always believed you should try to think like your enemies, and we have lots of them. Predatory short hedge funds, the prime banks and brokers that enable them to do what they do, the regulators that look the other way when they violate securities rules and laws, and yes, elements within AMC that put Wall Street's interests ahead of the shareholders. And yes, if by this late date you can't see that Adam Aron is guilty of that, then just peek at your account balance. Morgan Stanley runs our board of directors, and Citi, a known short seller of AMC, is our chief investment banker and helped plan everything we're experiencing now in our very own boardroom, beginning with the issuance of Ape. Now, if I were a short seller after everything that's happened, especially after this ridiculous reverse split, the first thing you want is the price down. Okay, check. Then you want the existing shareholders to give up and sell. But once again, many of the apes are stubbornly buying up the float and refusing to leave. So if they can't get us to sell or stop us from buying more, the next best thing is to do what I call priming the pump. In other words, frustrate the shareholder base so much that all of them will sell the next time the stock rallies. Now, sadly, this is where many of us are at today. We're frustrated, and even my fellow YouTubers like Al from Boston, Lou from Wall Street, and several others are unanimously saying, the next time this runs, I'm out. In my opinion, when your enemy knows how you're thinking, that's a bad place to be. They've already divided us into two camps, the gullible and the no voters. Now they have many from both camps waiting to sell on the very next rally. I think it's time to take a fresh look at AMC, especially at these manipulated low prices. We must remind ourselves that the market doesn't care if you wanted a Lambo or a mansion. Those may be great motivators to become better traders, but they will not help in our analysis. The market doesn't care if you're tired of waiting or frustrated. At 76 cents pre-split, AMC is dirt cheap here. I think our enemies will continue to manipulate and control the stock. I think regulators will continue to ignore their activities or just hit them with token fines. I don't think the shorts have covered in earnest yet. I think AMC will continue on its current trajectory of recovery and improving fundamentals. I noticed that the hit pieces on AMC have intensified again. I believe the shorts will never cover until they're forced to. And the catalyst for that will only be a black or white swan. It won't be anything coming from the company, like a dividend or something like that, because I promise the shorts will have a hand in designing it, just like they did with Ape. The good news is we are due for a black or white swan, and don't tell me they never happen, because we recently watched a 167-year-old bank, Credit Suisse, crumble and implode under the weight of its own recklessness. I believe there will be a rally in the stock before the annual shareholder meeting, which is only 45 days away from this recording. What I don't know is if the apes are going to give up and sell into it or buy the rally because they understand $20 per share is only $2 per share pre-split. Now, for you boxing fans, I'm pleased to announce this upcoming event. Mexican superstar and pound-for-pound great Canelo Alvarez will defend his undisputed super middleweight world titles in a blockbuster showdown against hard-hitting undisputed junior middleweight world champion Jermell Charlo live in the movie theaters Saturday, September 30th. Me and my buddies already have our tickets to see this event at the AMC Streets of Woodfield in Schaumburg, Illinois, and I hope to see you there. I'm also delighted to report that out of the 2 AMC theaters near me, the South Barrington campus is already sold out for the fight. This further proves that events like Taylor Swift and live sports can be successful in the theaters. Not everyone wants to sit home on the couch like Gasparino, swilling Belvedere while your wife polishes off an entire tray of lasagna. Also, if you're a fight fan, please visit my friend, 2-time world champion Paulie Malignaggi's YouTube channel to get insights on the fight and boxing. Paulie is also an ape, so that means the next time I see him, I may have some explaining to do. The address is at Paulie TV Brooklyn, and please go over there and say hi from Uncle Frank's channel and subscribe if you like the fight game. And what are my contacts talking about on LinkedIn? Citadel. Let's start with Ryan Tannehill. SEC charges Citadel Securities for violating order marking requirements of short sale regulations. The SEC today announced settled charges against broker-dealer Citadel Securities for violating a provision of Reg SHO, the regulatory framework designed to address abusive short-selling practices, which requires broker-dealers to mark sale orders as long, short, or short exempt. These records are routinely used by regulators in policing prohibited short-selling activity. To settle the charges, Miami-based Citadel Securities agreed to pay a $7 million penalty. You see, the cleanup operation is on the way. Do whatever you want. If you get caught, pay a fine, resume stealing. And then there's Aaron Abrams. Citadel Securities just paid $7 million for naked short selling, the same stuff they were doing in 2008, so they can continue to defraud American markets out of billions of dollars, and they don't even have to admit fault for wrongdoing. The US SEC is literally telling criminals that they will protect them from the public now. US Department of Justice, you should be ashamed of yourself for allowing this to continue. I could go speeding in my car and lose my license, but Citadel Securities can rob us blind and carry on like nothing happened. Gary Gensler is either complicit or an idiot, and he's too rich to be an idiot. People, try to remember, $7 million? I mean, this is a guy that bought a $100 million painting during the pandemic. Okay, this isn't even, the lunch tab for Citadel. All this talk about Citadel reminds me of the early days of the GME and AMC trades. From GME Jungle on Reddit, Citadel has been fined and or censured 59 times over the past 12 years. If a retail broker had Citadel's history of fines and alleged transgressions, they would have been barred from working in the industry. But guys, nothing has changed. This is the same program. July of 2020, Citadel agreed to a $700,000 fine by FINRA for executing customer orders at prices worse than it traded for its own account. This went on over a period of years, guys. They weren't forced to admit or deny the charges. They just pay the fine and resume stealing. And this guy is out there giving interviews like he's a respectable businessman. 59 times in the past 12 years? November, same year, 2020, FINRA fined Citadel Securities $180,000 for failing to mark 6.5 million equity trades as short sales. So they cheated on 6.5 million trades. They were fined $180,000. The bottom line here, guys, is these people, they have every advantage in the world, but they still have to cheat to win. That's Kenny in the upper left-hand corner with that $100 million painting he bought during the pandemic. The genius of Kenny Griffin is he gets to pretend to be a legitimate businessman. He's out there giving interviews but what he really does is he spreads the money around so much that the regulators lose their will to even investigate him. I mean, he's really got to go over the line to get caught. And when he does get caught, it's a slap on the wrist. He gave Janet Yellen $810,000, for a couple speeches, a couple Zoom calls while she was in between jobs. You really think, she's going to go after Ken Griffin? He gave money to Biden's inaugural committee. He's also a big donor for the Republicans. He gave $100 million as a midterm donor. Harvard, he'll give to everyone $300 million. They renamed a school after him. Even though he's a top Republican, and that's obviously a liberal university. If you spread enough money around, you can get away with murder in the United States. Now, speaking of regulators, mark your calendar for this Wednesday, September 27th, because the House Financial Services Committee is going to fire up Gary Gensler's ass at 10 a.m. Eastern Time. Be sure to check in if you can. Now, if you get 10 minutes before Wednesday's hearing, go to Wikipedia, look up your representative on this committee, and send them an email about your feelings regarding the SEC and Gary Gensler. What questions would you like them to ask Gary? Maybe you could send over this information to your representative. After all, it is the SEC itself that publishes the FTD data. A headline from The Street. AMC stock failures to deliver reach nearly 70% of August trading volume. A significantly high percentage of failures to deliver in August has raised significant questions about the current state of AMC's affairs. As a reminder, a failure to deliver occurs when a trader is unable to deliver the shares they have sold short within the established time frame. This can result from various situations, including naked short selling. This happens when short sellers sell shares they don't own or can't borrow, effectively creating synthetic short sales. Liquidity problems, when there are no shares available for borrowing in the market to facilitate delivery, FTDs can occur. Market manipulation. In some instances, FTDs can be exploited to manipulate share prices. System failures, errors in clearing and settlement systems can also lead to FTDs. Can you say glitch? Now, I know one guy who won't be cooperating with the Oversight Committee, and that's Adam Aron. I want you people to know most CEOs will never comment on this topic, FTDs. This area almost always gets the no comment response, but our guy goes out of his way to lie right to the face of his shareholders. Quote, candidly, I've seen no evidence so-called fake or synthetic shares exist. Do you Adam fanboys really believe this man is unaware that FTDs were 70% of all of August trading on his company's stock? Just take a look at the chart on the right. Now, guys, I want to review this article from earlier in the month to support my argument that it's only a white or black swan that will cause a significant short covering event in AMC. It will be nothing. Adam Aron, the company, the regulators do. Not if all these entities are working together against us. On the screen, there's what I call a cartel known as Equilend. And the headline is, inside the $499 million lawsuit settlement, exposing opaque world of securities lending. From the article, some of America's billion-dollar pension funds have agreed to a proposed settlement in a lawsuit against Wall Street banks in a long-running case that cracked open the hidden world of securities lending. In securities lending, pension funds and retirement plans lend out their portfolio shares to hedge funds and other investors using Wall Street brokers that charge a fee. Remember the cost to borrow fee, guys, when it was over $1,000? By some estimates, stock lending totals $1.75 trillion in market value. But the business was so tightly controlled that it effectively functioned as a cartel, according to the pension fund's class action lawsuit. Now, guys, on your screen, you could see some of the participants in Equilend: Morgan Stanley, Goldman Sachs, UBS, JP Morgan Chase, Credit Suisse, Bank of America. I'd like to point out that these are all current or former short sellers of AMC, with the exception of maybe Morgan Stanley. What's ironic about Morgan Stanley is if you add up all the stock Adam Aron, the entire senior management team, and the board have, it's less than 1%. These are the things the yes voters don't want to hear. They never want to argue about. But yes, all those people own less than a half of 1%. Morgan Stanley itself owns 4 or 5 times that amount. But they lead our board of directors, guys. Do you see how these things could be construed as a conflict of interest? But everyone else on your screen is a short seller of AMC. Now, guys, if the prime banks and brokers are working against us, along with the predatory short hedge funds, and they're getting cover by the DTCC, which is owned by the brokers, and the Securities and Exchange Commission and FINRA, they won't do anything except hand out little fines. There's no possible way we can beat these people. These people can cheat with impunity. Okay, they could do whatever they want, and no one's going to say anything to them because they hand out enormous political contributions. So, guys, it's going to take a white or black swan to throw these people off balance. That's the only way we're going to win. Listen, guys, securities lending is a $1.75 trillion business. At one point, AMC may have made up 10% of that entire business, even though AMC is only a tiny sliver of the entire U.S. market cap. Look at that headline. In April, our tiny theater stock was the most profitable stock for lenders out of thousands of stocks. When you have a cartel like Equilend, made up of the biggest prime banks and brokers, almost all unanimously short AMC too, working with the hedgies, that's their clients, working with the DTCC, which is owned by the brokers, working with the LULD, all under the supervision of the SEC, who is pretending none of it is going on. I promise you we will not beat these people. We will have to wait for them to mess up or turn on each other. You are witnessing the cleanup operation, and they are going to get away with it, just like they got away with removing the buy button, the GME dividend split fiasco, and the disappearing AMC FTDs. In my opinion, this can't all be possible without at least the tacit approval of the SEC. They are letting them get away with it, and there's many good reasons. They don't want another bank, broker, or clearing firm failure this close to an election. Instead of holding the guys that put on illegal bets so large that can't possibly be covered responsible, they will let retail twist in the wind. But there are two things that can beat these clowns, and that's white or black swans. Unexpected events that negatively impact them, just like what happened to Credit Suisse and FTX. In my opinion, we are overdue for one. Now for you technical guys on Swan Watch, have you seen this one yet? US dollar scores first golden cross since July 2021, signaling more trouble for stocks ahead. From the article, the US dollar has completed its first golden cross since July 2021, which could mean the greenback is going higher, creating more problems for stocks. You guys need to know this one. A golden cross occurs when the 50-day moving average closes above the 200-day moving average. It's a popular signal among technical analysts and often, though definitely not always, signals that momentum is building in a given direction. On the other hand, a death cross occurs when the 50-day moving average breaks below the 200-day. A death cross in the US dollar occurred on January 10th. Afterward, the buck trended lower for the next 6 months, ultimately hitting its lowest levels of 2023 on July 14th. Since then, the buck has been in a sustained uptrend that some currency strategists think has grounds to continue, now that the Fed Reserve bolstered its forecast to keep interest rates above 5% through 2024. According to an analysis by Dow Jones Market Data, the dollar typically continues to climb during the 3 months following a golden cross, gaining an average of 1.9%, while trading higher 79.2% of the time over. Okay, now let's shift briefly over to crypto. From Crypto on the Street, fund manager says BlackRock ETF will drive $150,000 Bitcoin price. From the article, the number of regulatory requests to offer a spot Bitcoin exchange traded fund or ETF coming from a range of institutional financial firms has led to bullish speculation and remarkable excitement from the crypto market. As the SEC considers such filings from BlackRock, Fidelity, ARK Invest, and more, it seems like at least one upcoming approval is just a matter of time. The SEC is set to hit its next set of deadlines for approval decisions in mid-October, and in the meantime, investors are left to speculate about which firm might receive approval first. And yes, guys, I said it in the thumbnail, and I'll say it again here. I trust Ripple XRP as my store of value more than I trust any fiat currency, including the US dollar. The United States national debt now exceeds $33 trillion. Go ahead and try and change my mind. And just to give you some context, $33 trillion is roughly the value of the economies of China, Japan, Germany, India, and the United Kingdom combined. And that amounts to about $252,000 per household or $99,000 per person in America. Within 10 years, that's about 120 months, the federal government will spend more on interest payments than it traditionally has on research and development, infrastructure, and education combined. Put simply, we are not investing enough in our future. We are spending $2 billion per day on interest payments on the debt while we're sending $113 billion to Ukraine. It's not sustainable. And from our esteemed Treasury Secretary, who makes more money giving Zoom calls to Citadel than she does working for the American people, gave her opinion on the US dollar recently in this article from MoneyWise. A natural desire to diversify. Janet Yellen says Americans should anticipate a decline in the US dollar as the world's reserve currency. From the article, the US dollar saw an 8% decline in its share of global reserves in 2022, causing some to question whether the dollar's days of dominance are over. Treasury Secretary Yellen gave her 2 cents on the matter during a congressional hearing in June, stating that no currency currently exists that could displace the greenback. U.S. sanctions and foreign policy plays have inspired a backlash from China, Russia, and other prominent countries who may be keen to dethrone the dollar. Yellen remains adamant that it will not be easy for any country to devise a way to get around the dollar. She did, however, warn that the dollar's share of global reserves may continue to decline as countries look to diversify. Now, please consider these headlines for a moment. Could the US dollar lose its reserve currency status to China? De-dollarization, shifting power between the US and BRICS. Will a new global reserve currency threaten the greenback supremacy? The short answer is yes. Ripple's liquidity hub, a game changer for Bank of America and XRP adoption. And then from BN Crypto. Ripple sees banks using XRP for global money transfers following landmark ruling. You see, I'm not interested in diversifying my assets in any currencies. I trust precious metals, real estate, and mainly XRP far more than any fiat, including the US dollar. I believe XRP will be the financial language all nations will speak when it comes to cross-border payments. But what I admire most about XRP for cross-border payments is all banks, cryptos, and foreign currencies are welcome to use this infrastructure superhighway. XRP poised for takeoff in the US via Ripple's ODL as pundits sees potential adoption by big banks. From Crypto Basic, 4,096 US commercial banks may work with Ripple as XRP wins. Crypto State, Colombia's central bank to pilot Ripple's CBDC platform. From Cointelegraph, SBI expands Ripple remittance tech to banks in Vietnam, Indonesia, Philippines. Ripple-based MoneyTap adopted by 3 Japanese banks. Financial giant goes big on Ripple with XRP-based service. That's about SBI. Every bank in Japan will use Ripple XRP by 2025, says SBI CEO. Can it drive price to $5? And why is it everything I'm interested in is subject to glitches and these unusual phenomenon? From Cryptopolitan, mysterious Forbes article sparks speculation in XRP community. An intriguing article on Forbes has caused recent ripples in the XRP community. Titled The Emerging XRP, A Future at $59,472. The article ventured into audacious territory by making bold predictions about the price of XRP. However, the article's short-lived presence on the Forbes platform, followed by its unexplained removal, has led to questions about its legitimacy and the motives behind its disappearance. Everyone is always asking me how high I think XRP can go. The truth is, I have no clue. I just believe there are no other coins that get these kind of headlines. No other crypto being mass adopted in this way. Hell, I hope it goes as high as Bitcoin, but I am not a hype style YouTuber. If XRP gets a big rally, I will initially be waiting for it to take out prominent tops of its recent past, like 82 cents, $1.29, $1.79, $3.30, and its all-time high of $3.84. Now, one of the crypto guys I follow is actually despised by many in the XRP community, but you have to force yourself to listen to dissenting opinions. So for right now, my price target is $4 per coin, and I have no intention of selling any XRP until I see how it trades above my price target. But I want you to take a listen to @VirtualBacon's opinion from 1 month ago. He doesn't believe XRP can hit 100, and here's his explanation.
I don't believe XRP can hit $100 plus like some fanatic channels claim. XRP's token supply is capped at 100 billion, and all of the supply was pre-mined back in 2012. Today there are 53 billion tokens in the circulating supply. 5.5% is held by Ripple Labs, and another 41.9% is held by this escrow account, which is also controlled by Ripple. At $100 per coin, the total market cap of XRP would be $10 trillion. This would give Ripple Labs $4 trillion of assets on its balance sheet, since they hold 40% of the total supply. In comparison, Apple, the largest company in the world, is only valued at $3 trillion. Maybe this can change if Ripple burns all their tokens and truly makes the token supply decentralized, but I fail to see why they would light money on fire.
Now, Virtual Bacon has a point. The entire crypto market cap at the time of this recording stands at $1.05 trillion. Maybe now you can see why my current price target is only $4 per coin until I see real adoption in the future and not just headlines. But now I want to touch on a couple things Virtual Bacon left out. Consider this article from last Monday. Citi highlights transformation in cross-border payments. Expects $250 trillion movement in next 5 years. Citi has released its latest Global Perspectives and Solutions report on Monday, focusing on the future of cross-border payments. The report anticipates a significant increase in cross-border payment activity, presenting a major opportunity for players in this space. The Bank of England estimates the value of cross-border payments to rise from nearly $150 trillion in 2017 to over $250 trillion by 2027, a surge of over $100 trillion within a decade. This growth is expected to favor innovative players who invest in this business. According to Citi's proprietary survey, almost 90% of financial institution clients expect at least 5% of market share will be lost, primarily to fintechs over the next 5 to 10 years. And guys, what about all the new crypto ETFs that are in the pipeline? From CoinDesk, will 2023 be the year of the Bitcoin ETF? The bottom line here, guys, is I don't know how high XRP is going to go, but for now, I have no plans to sell it at 4. In closing, guys, I hope you're enjoying the show. Hit the like button, please subscribe, and share this on your social media platforms. We only have 45 days before AM Senior Management has to explain to shareholders face-to-face why their stock is down 90% year over year in the middle of an avalanche of good news. I do believe there will be a controlled rally before then. What I don't know is, are the apes going to buy the dip and the rip, or are they going to pack up what's left of their bananas and go home? Hey, it's a meme stock, right? So there's going to be memes. What do you think of these? On your left, hashtag checkmate. How to Profit from the Misery of the Pandemic and Your Shareholders by Adam Aaron. Learn how in 2020 AMC lost $4.6 billion, but I made $20.9 million even when the theaters were closed. Bonus chapter. Learn how to invest in a bankrupt gold mine when you're teetering on bankruptcy yourself. No precious metals experience necessary. Brought to you by Philip Lader of Morgan Stanley and Derek Van Zant of Citi. Then on the right, AMC down 90% year over year. Adams 2019 comp plan, $9.67 million. Now $23.7 million, up over 100%. By Adam Reverse Split Aaron. You know, it might be time for AMC Senior Management and its board to return 90% of the 2022 and 2023 stock awards. Just a theory of mine. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.